to make his market calls. Hulbert Financial Digest describes Crawford's performance as excellent. By following Crawford's signals for the past 5 years, Hulbert shows a gain of 83.6%. If all of that doesn't send you into orbit, perhaps his latest signal will. Joining us now to discuss this, Arch Crawford, editor of Crawford Perspectives in our Midtown Bureau. Good morning, Arch. Good to see you again.
Hi, Mark.
You turned bullish on this market back in October, November. Perfect timing. You've ridden it all the way up, and then I get your newsletter in the mail. I open it up, and Arch is changing his tune. Now, if a man's been right for this long and he changes his tune, I want to know what's going on. So, what are you seeing in this market now that is causing you to turn and not be bullish?
Well, we've had quite a few changes in the technical indicators. Some of the fundamental things, like funds cash, is down to a 16-year low, and we've had rollover in momentum and the break of long-term trend lines, a loss of leadership in the high techs getting killed last couple of weeks. So there's a lot of danger signals in the air, Mark.
But hasn't this market given off a lot of technical danger signals in the past and then just kept right on trucking?
No, as a matter of fact, this year, we've every time the market has dropped 3 or 4 days, the trend or arms index has popped back up over par, and the put-to-call ratio has popped back over 1.0. So I thought that it's been a fairly easy call this year. So this is the first time that we've seen serious deterioration.
What sort of downside risk do you see here, Arch?
Well, in the letter I said from a minimum of 200 to a maximum of 2,000. Now that's a pretty wide range.
Sure is. I'd like a bit more finesse in my financial advice, if you don't mind.
Yes. Well, in the fundamental area, we've got these ratios so incredibly overvalued that they're reminiscent of 87 and 29. So I think the danger is greater than it has been in quite some time. And I don't want to be in the market during this period because the danger is 2,000 points, which would be the same percentage as 87.
You're giving your stop loss plenty of room, though.
I'm giving my stop loss plenty of room. One of the reasons for that is, by the way, that since I wrote the letter a week ago, the put-to-call and trend in arms have popped up quite sharply. So I'm looking for one more rally, 1.5 to 2 weeks into the solar eclipse coming up on the 24th. Then from there, I see some very terrible things.
All right, now let's turn to that, because of course you do put astrology into the mix here, and sometimes I cynically believe, Arch, that it's just a con, that you're really just a top-notch technical analyst, and you use the astrology to get attention. But I'm going to give you the benefit of the doubt here, and again, you've been right for a long time now. What about this lunar eclipse yesterday, I believe it was? You are saying that this weekend, or within the next few days, is a critical time.
Yes, usually after an eclipse of the moon, quite often it will be a big down day, the day following it or the 2 days following it. Mm-hmm. And I was looking for the day to be down on my hotlines. I went short and I told him I'd probably cover on Tuesday morning because of the put-to-call and the trend readings being so high, and go up for one more high into new high territory. But we have had a loss of momentum in new highs. The new lows have been picking up over 40 over the last week and a half, and that's another of those danger signals. Mm-hmm. So the bad eclipse, the really terrible one, is the 24th. And
of October?
Yes, it is.
And that's a solar eclipse?
That's a solar eclipse, and it suggests...
And the significance is?
The suggestion is that there'll be some international incident, possibly a war in the Middle East, or Arab troops being sent to Sarajevo, or the loss of a Western favorable Arab nation to the fundamentalists.
All right, let's get back to this issue of valuations, which you mentioned too. Valuation fundamentals just as severe as they were in 87 or 29, you said, or as severe.
Yes.
One of the things that strikes me, at least in the 87 comparison, is interest rates are nowhere near what they were back then. So how can you compare the two?
Well, we can compare the two in terms of dividend payout, which is eventually the ultimate fundamental indicator, because people go into stocks because what they can get from them, and what you get from them is the dividend. Now, when you start playing...
Well, don't you get capital appreciation, too? And isn't, I hate to say it, aren't things changing now to the point where people look more to the capital appreciation than to the dividend because they're thinking in terms of growth?
Yes, but that is the signal of a very long-term top when people start doing that. Because the price appreciation is very radical and very changeable, very variable, and not very predictable, whereas the dividend payout usually tends to last a long time and is quite steady.
Okay, we've only got less than 15 seconds left, Arch. So your outlook here, you're starting to hedge your bets a little bit. We could get another run to the top, but you still think we're on the verge of a fairly major down move.
Yes, I'll be definitely short again by the 24th.
Okay, Arch, thank you very much. Arch Crawford, editor of Crawford Perspective, bullish since last October or November, which was the right thing to do, and now he's changed his mind. Market open. Joe Kerner will have his latest report on this morning's early stock movers when we return.
And MCI and Sprint, because people believe they should be paying for the time they're using, and that's all. LCI is simple, fair, and inexpensive.
Call LCI now and you'll get 120 minutes for just a penny a minute on calls anywhere in the continental U.S. with your World Card Plus and Home 800 number.
We don't have any disclaimers, only the LCI number.
The Justice Department says it's backing a bid by U.S. West to provide long-distance telephone service outside its local telephone service area. U.S. West provides local phone service in 14 western states. It would be the first Bell company to be allowed to provide long-distance service outside its territory. In April, the Justice Department endorsed Ameritech's bid to provide long-distance service within its region. Shares of U.S. West today finishing up one at $48 a share. A windfall for customers of Southwestern Bell. They will get $438 million worth of refunds under terms of a settlement in a 4-year-old refund and rebate case. The decision, which affects 1.3 million residential and business customers in Oklahoma, means they will receive $325 in benefits and discounts from Bell. Shares of Southwestern Bell down a quarter on the session at 55 3/8. Time to take a look at the charts. Here's Sue and John Murphy.
Thanks, Ted. And John's going to cover a number of areas for us that were hot today. We're going to start out with those tech stocks. And then, as promised, John will ride the rails and tell us where some of those transportation stocks are headed. But we're going to start out with the high techs, John. Not a bad day, a recovery for some of the key tech stocks that have been pretty badly battered.
That's right, Sue. I think for the first time in about 2 or 3 months, I really have something nice to say about this group. We're going to look at 2 stocks in particular that have really been among the weakest of this sector, that have come down into some very important support levels and may be holding here. Let's begin with Microsoft. This is, I think, the ultimate bellwether for the entire technology group. And you'll recall that it was back in July when Microsoft peaked, actually when Windows 95 was actually released. And it has been the weakness in Microsoft, along with some of the other stocks, that has really kept me very nervous and very negative on the technology stocks. But the good news is that the stock has dropped 25%, which is a pretty significant decline. But more importantly, notice the support level, that blue line drawn in down around in the 80 to 82 area. That is a low that was set back in June. That has been a downside target. And also, maybe even more importantly, that 200-day moving average actually is sitting right at 80. And we hit that yesterday. We actually hit 80 yesterday, and we turned up on some pretty good volume. So when you put it all together, it suggests that this sharp decline that we've had in Microsoft may have run its course, at least for now. The market is in a very important support area. We've also retraced about 50% of the gain over the last year or so. So this has been, I think, one of the real depressants in this sector. And assuming this stock is able to hold in this 80 to 82 area, I think it could alleviate some of the pressure. The only caveat, though, there is some resistance above the market at 92. You can see that's where that downtrend line comes into play. I would feel a lot better about the stock if we could break that downtrend line. But so far, at least, Microsoft are holding pretty well at some pretty important support.
IBM, Big Blue, also had a gain today. How does it look to you on the charts?
It looks surprisingly like Microsoft. I was just struck with the coincidence. Here again, we're showing IBM going back to March. We have 2 moving averages on the chart. It was back in August when IBM and many of these other technology stocks broke their 50-day moving average that I turned very negative, at least on a short-term basis. And usually when that happens, we look for a decline at least down to that 200-day moving average. We talked about some support right around that 90 level in IBM, and you can see that is a low that was set back in June. Actually, it was in the 88 to 90 area where that blue line is. We hit that yesterday, in fact. And also notice here again, we're sitting right on that 200-day moving average. We closed up 1 3/4 today, one of the big gainers in the Dow. So here again, IBM, the same basic story. We've also retraced, this stock had gained about 40 points this year. We've retraced about half of that. So here's another stock that has come down into a major support area, looks very oversold, and I suspect that we're going to see some bottom picking in both of these stocks.
Big winners today in the transportation stocks. The whole index was up, but the rail stocks very